So sticking with that technology trade, guys, the NASDAQ 100 is breaking below that key kind of technical level this week, and that could mean more downside ahead, according to our next guest. So let's bring a guy who watches the charts. It's Jonathan Krinsky, the chief market technician over at BTIG. You see all of these things. You see all of these charts and all of these lines and levels. Take us through why you think there could be hypothetically danger ahead, Jonathan.
Hey, Dom. So, there's obviously you guys have been talking about some of the moving averages. For us, moving averages are more a gauge of trend. And so, the fact that we broke under the 50-day moving average, there could be some issues there, but that's not the key reason that concerns us here. The two key reasons are, the first is this volume profile that we talk about. Most people look at volume on a time series, so how much volume trades on any given day, but we like to look at it on a price basis, so how much volume trades at each given price level over the last 3 years. And basically what we've found is that around this 369, 370 level on the triple Qs is a significant amount of volume is traded over the last 3 years. So the fact that we broke below that, what we call a volume shelf, opens up a downside volume pocket. And the issue is we accelerated so quickly on the upside from late April when the Qs were around 320. We rallied about 16% from late April into late into mid-June when the Qs hit around 370. So that quick move on the upside can often be unwound on the downside, and that's really the issue. There is that significant volume pocket. Now, the other issue is momentum, and from a weekly standpoint, if you look at weekly MACD on all the major tech ETFs, specifically the XLK, which is the major tech ETF, we're now flipping to a sell signal from positive territory. That's the first time we've had a weekly sell signal like that since the first week, since the mid-January 2022 when that bear market started. So, you have momentum waning, starting to roll over, and a pretty significant break of what we consider key support. So, all that suggests there is some downside risk ahead to us in the NASDAQ.
So Jonathan, we've made a lot and talked a lot about this idea that certain parts of the technology trade have been more impacted from a downside momentum standpoint than others. You highlight the semiconductors. I wonder if there are other places in the market that you're watching right now that are starting to show signs of deterioration or perhaps a pickup, if you will, even if there is such a case. Is it in places like, say, cloud computing or software or cybersecurity or fintech or the multitude of other different places? Because we know that tech is such a broad kind of umbrella to cover all these industries under.
Yeah, I mean, I think clearly semiconductors are at the heart of some of the downside momentum. They were kind of the leaders on the upside, but the way tech is traded really for the last 2 years, it is pretty broad-based. You can maybe differentiate the FANG names from some of the smaller cap tech names, but it's pretty broad-based. Some of the sell signals we're seeing. So I think semis are vulnerable. Software is probably vulnerable. And then after you kind of get that shakeout pullback, that's when you can kind of differentiate and start to see some relative strength from that pullback. Now, I will say on the flip side, there is some positive momentum that we're starting to see in the commodity space. Energy obviously has been a leadership area over the last few weeks. So while tech is seeing weekly MACD sell signals, energy is actually seeing a weekly MACD buy signal. So we like energy versus tech here. We've been talking about that for the last few weeks, and it probably has some more legs here.
All right, energy versus tech as the pairs. That's the call from Jonathan Krinsky over at BTIG. Thank you so much, sir. We'll see you soon.